A very good morning from Khandwala Securities Limited and welcome to Friday's trading action at Dalal Street dated February 11th, 2022. Before start, a recap of yesterday's trading session. Well, Nifty ended on a positive note on backdrop of RBI's dovish policy stance. Digging deeper, Nifty extended the uptrend for the third session in a row, surpassing the 17,600 region after the Reserve Bank of India kept its key policy rates unchanged and continued with its accommodative stance to support growth. This was the 10th straight policy when the repo rate was left unchanged at 4% and the reverse repo rate at 3.35%. But this Friday morning, judging by early action at SGX Nifty, it appears Nifty is likely to come under heavy bearish pressure. The negative catalyst, blame it to the inflation report from the US that showed that the consumer price index CPI jumped to 7.5% on a yearly basis in January. Well, the CPI is at a 4-decade high. The street feels that hot CPI inflation may mean the Federal Reserve raise interest rates even faster. So a more hawkish Federal Reserve is now on the backdrop. The Fed essentially has confirmed that the near-term rate hikes would be followed by a reduction of its $9 trillion balance sheet. The Fed officials meet next month. The big question, can inflation reading be brushed aside? Technically speaking, the bullish door will open on the upside only if Nifty shows continuation of strong recovery and most importantly, moves above 17,807 mark. For the day, the make or break supports on Nifty and Bank Nifty are placed at 17,411 and 37,366 mark. Traders will keep a close eye on the other two negative catalysts. First, the 10-year US Treasury bond yield has risen to 2.012%, the highest since November of 2019, while 2-year note jumps to 1.507%. Second, spiking crude oil prices on backdrop of a conflict between Russia and Ukraine. The Nifty options data for February series suggests Nifty is likely to be in a trading range of 17,000 to 18,000 zone. Maximum call open interest is at 18,000 followed by 17,500 strike price. So the 18,000 mark will be Nifty's crucial resistance zone. Maximum put open interest stands at 16,500 levels followed by 17,000 levels. Call writing was seen at 17,600 and then at 18,300 strike price, while there was meaningful put writing at 17,600 and then at 17,300 strike price. Bank Nifty's maximum call open interest at 40,000 strike price while maximum put open interest at 38,000 strike price. As per Thursday's provisional data available on the NSE, FIS sold shares worth Rs 1733 crores. Please note FIS net outflow since October 2021 is Rs 1.46 lakh crore. Outlook for Friday, caution is likely to be the order of the day and any intraday rallies are likely to be stomach churning. Expect the session to be a bit rocky, slightly painful as traders sense concerns of hot inflation. Caution will be the buzzword. Now before we end, Q3 earnings to trickle in today. Apollo Hospital, India Cement, Davis Lab, Motherson Sumi, ONGC, Glenmark, GRSC, Ashok Leyland, Metropolis, PFC, Voltas, IDFC, Honeywell Automation, Nazara Technologies. That's all we have for now. For any queries, do contact us at 022-4076-7373 and do visit our website www.kslindia.com. Thank you and have a profitable day. Please note that the stocks mentioned in this podcast are only for educational purpose. Khandwala Securities Limited or any of its employees shall not be held responsible for any investment or trading action undertaken by any person based on the stocks mentioned in this podcast.